Good morning and welcome to Economy and Markets. Today, July 28th. It's a wonderful morning that we're seeing, and we're going off with the business news making the rounds. We're starting off with Dangote Petroleum Refinery that has marked a significant milestone in its nationwide fuel distribution initiative. The company just received 4,000 brand new CNG trucks in Lagos. These trucks are part of the company's 720 billion investment program aimed at revolutionizing the downstream sector. The refinery plans to commence direct delivery of petrol and diesel to filling stations, industrial plants, and large volume fuel consumers from mid-August, basically eliminating logistics bottlenecks and cutting out middlemen. This initiative is expected to save Nigerians over 1.7 trillion yearly by reducing energy costs, and is expected to benefit about 42 million micro, small, and medium enterprises. The use of the CNG powered trucks is expected to reduce emissions and support the federal government's drive to promote cleaner energy initiatives, and the project is expected to create about 15,000 jobs across the logistics value chain and maybe resuscitate dormant filling stations. Then we're moving on to Dangote Cement. This time, the cement company announced its half-year results for the period ended June 30, 2025, with a pre-tax profit of 730 billion, representing a 149% year-on-year growth and nearly 99.7% of its entire FY 2024 pre-tax profit. The company's profit after tax stood at 520.455 billion, up by around 174% year-on-year, exceeding the entire 2024's full-year profit by 3%. The impressive bottom-line performances was driven by top-line growth, moderation in direct and overhead costs, and reduction in finance costs. Revenue rose by 18% to 2.1 trillion, while cost of sales grew by modestly by 2.4% to 853.56 billion, expanding gross profit and lifting the gross margin to 59%. Operating profit margin improved to 39% in the first half, up from 31.4% in H1 2024. With profits already surpassing full year 2024 figures, Dangote Cement's solid cost control and improved margin indicate potential for sustained momentum and surpassing 2024's performance in 2025. The impressive earnings is expected to boost investors' confidence in the company's operational resilience and earning quality. Then we'll move on to commodities exports in Africa that declined by 5.6% between 2021 and 2023, primarily due to falling oil prices and reduced export volumes from key producers of oil such as Nigeria, Algeria, and Angola. According to the newly released United Nations Trade and Development Report, The State of Commodity Dependence 2025, the continent's heavy reliance on raw commodity exports makes it vulnerable to price volatility and external shocks. The report reveals that two-thirds of developing countries, including over 80% of the world's least developed countries, are heavily reliant on commodity exports. This dependence hinders economic resilience, leaving nations susceptible to fluctuations in global markets. UNCTAD advises that developing countries exporting over 80% of commodities in raw form are to add value to their exports, enhancing economic stability. Globally, commodities exports account for about one-third of international trade, with energy products dominating at 44.5% of global trade. Despite this, the share of energy products has declined from 52.1% a decade ago, reflecting weakening oil prices and evolving global energy demands. Agricultural exports rose 34% to nearly $2.3 trillion, with food products accounting for nearly 90% of the total value. Mining products contributed 23% of world commodity exports, averaging an annual value of $1.65 trillion. According to UNCTAD findings, it emphasizes the needs for diversification and value addition in commodity exports to mitigate economic risk and enhance economic resilience. Then we'll move from that to Bua Cement, that reported a significant rebound in its profitability as its net income for Q2 2025 rose by over 500% year-on-year to 99.77 billion. Basically, the company's growth, strong revenue growth, and easing cost pressure drove this performance. The company recorded a revenue of 289.5 billion naira in Q2, marking a 43% year-on-year increase from the same quarter in 2024. However, while in terms of the half-year results, the company recorded a revenue of 580.3 billion naira, up 60% from the 363.9 billion reported in H1 2024. Its cost moderation helped its margin expansion, with its gross profit more than doubling to 147.3 billion naira and its gross margin improving to 51% in Q2 from 32% recorded in Q2 2024. The company recorded a net FX gain of 582.8 million naira in H1 compared to a 40 billion loss reported in H1 2024. This has helped offset its finance cost. The company's operations generated 152 billion in net cash in the first half, and its cash balance more than doubled to 163.4 billion at the end of the half year. With its half-year earnings already outperforming last year's full-year figure, Dangote Cement is on track for a record performance in 2025. However, analysts are warning that sustaining margins amid inflation, rising logistic costs, and market competition will be a challenge. After the break, we'll return with updates from the market last week. All right, we're back with reports from the NGX. Last week, we saw the all-share index. Last week, Friday, we saw the all-share index go up by over 1,250 points, in percentage 0.94 percentage points, hitting a new all-time high, crossed the 134,000 mark, now at 134,452.93 points. Year to date, the market has now gone up 30.63%. This has driven the market cap to 85 trillion naira, basically the highest ever seen in naira terms. Then our total traded value for last week Friday was 713.7 million shares, and in terms of value, this is about 24.2 billion naira. Then we'll move on to the top gainers in the market, as we saw Champion Breweries after a record-setting 2.3 billion net income for H1 2023. Investors put a lot of confidence in that stock. We saw Champion Breweries go up 10% to hit a share price of 12 naira 32 kobo. Ikeja Hotels, after a series of corporate disclosures, also went up 10% to hit a share price of 23 naira 10 kobo. The same was found in Unilever, as there was significant buying, total bidding on that stock. We saw it go up by 10% to hit a share price of 68 naira 20 kobo. Then Nigerian Enamel Wear, another company that went up 9.98%. That was double consecutive days of significant gains. It hit a share price of 27 naira. Then we also see we see the Initiates PLC hitting a record share price 16 naira 13 kobo after gaining 9.95% on Friday. Our losers, we see Triple G down, full sale of Triple G stocks. There was a full offer on Triple G as it lost 10% to trade at a share price of 3 naira 51 kobo. Then Tantalizer PLC. Tantalizer has been up and down for most of 2025. We see Tantalizer up and down for most of 2025. It went down by 8.55% to hit a share price of 2 naira 46 kobo. Suno Assurances down 6.64% to hit a share price of 4 naira 64 kobo. Then we see something similar in Ecobank Transnational Incorporated, down by 5.88% to trade at a share price of 32 naira. And Nimet down by 4.55% on Friday to trade at a share price of 6 naira 50 kobo. Our most actively traded stocks on Friday, we see starting with Access Holdings, that 42.4 million shares at the trading in deals worth about 1.18 billion naira. Universal Insurance, we saw 40.688 million shares in deals worth around 29.7 million naira. Something similar with Tantalizer 32.199 million shares, basically around 32.2 million shares In deals, what about 83.126 million naira. Pardon. Then GTCO Holdings, 28.705 million shares in deals worth about 2.698 billion naira. Ella Lakes, after its EGM, Extraordinary General Meeting on Friday, there was significant trading action on Ella Lakes. On Friday, we saw 26 million Ella Lakes shares exchange hands in deals worth about 260.458 million naira. Then we move on to the weekly market report, where during the week ended July 25, we saw the all share index gain about 2,867 points, marking a weekly return of 2.18%. The last week's performance was one of the weekly performances that has seen the market appreciate by over 30% in under 7 months. During the week, our top gainers started with the Initiates PLC, gaining 60.82% to hit a share price of 16 naira 13 kobo. Academy Press PLC also went up by 33%, rallied by 33% during the week to hit a share price of 9 naira 31 kobo. Enamelware rallied by 32.68% during the week to hit a share price of 27 naira. Then we see something in Wema Bank. Wema Bank went up by a whooping 23.6% to hit a share price of about 19 naira. Presco PLC went up 22.53% to hit a share price of 1,550 naira per share, making its market capitalization now enter the 1.5 trillion naira region. The company is now, in dollar terms, the company has now officially become one of the billion-dollar companies quoted on the NGX. NS Secure Electronic Technology was the top loser last week, losing almost 24%, almost a quarter of its value to go down to 92 kobo. Omatech Ventures down by 23.9% to go down to a share price of 1 naira 24 kobo. Maya PLC, after weeks of rallying, we see Maya PLC now begin to cool off. There's a cooling off of the overbuying effect. We see down 21.4% to hit a share price of 16 naira 50 kobo. Nimet Pharmaceuticals down 19.25% to hit a share price of 6 naira 50 kobo, and ABC, Associated Bus Company, down 18.76% to close at the share price of 4 naira 59 kobo during the week. Among our sectoral performers, all the sectors listed on the NGX, all the sectors tracked by the NGX all rallied last week. We start with the NGX Banking Index. NGX Banking Index gained 1.84% during the week. The Insurance Index gained 3.07%. Consumer Goods Index up 2.81%. Oil and Gas up 0.87%. And Industrial Goods up by 4.66% last week. So there was a rallying throughout in the market. From there, we moved to the global market on Friday. The global markets on Friday saw the Dow Jones Industrial Average hit an all-time high, a new record high of 44,901 points, as there was a rally in Apple stocks. Apple, especially, that is Apple Incorporated, the makers of iPhones and iPads and the iWatches, they rallied significantly on Friday, causing the Dow Jones Industrial Index average to go up significantly. Also, the S&P also hit a new record high, closing almost close to the 6,400 mark after gaining 0.44% on Friday. Nasdaq Composite was also up to cross the 21,000 mark, now after gaining 0.24% on Friday. Then in Asia on Friday, we saw it was mixed performances across the countries. In Japan, it was a 0.88% decline as the Nikkei 225 closed at 41,456 points. Kospi up slightly by 0.18%. That's the Korean index, the index that tracks the performance of the Seoul exchange, up 3,196 points. Then Hang Seng down by over 1% to close at the share price to close at 25,000 points. Then in Europe, last week was also a mix as we saw the FTSE down 0.20%. After hitting the 9,000 points, crossing firmly into the 9,000 points, crossing firmly into the 9,000 space, FTSE 100 cooled off a bit on Friday. It's now 9,120 points. The CAC went up slightly by 0.21%. Then the DAX index also went down slightly by 0.32%. And on Friday, we saw the Naira not really rally against other currencies, just maintain stability, the corridors of stability against the US dollar 1,533. However, against the euros, it declined slightly from 1,780 to 1,800. And against the British pounds, it also declined slightly to about 2,060 Naira. That's all we can take on the market rundown for Friday and for last week. After the break, we're returning with a conversation on Dangote Cement and its performance in H1 2025. Okay, let's talk earnings now, and we're going to be starting with one of the biggest names on the NGX, Dangote Cement. So basically, the company just released its second quarter result on Friday, and it looks like a very strong showing, basically. So looking at some of the numbers here, we see that they posted a profit after tax of 520.5 billion naira for the first half of 2025. That's a whooping 174% compared to the same period last year. When you look at it, for all of FY 2024, the company posted a profit after tax of about 503 billion, and in just H1 this year, they posted a profit after tax of 520 billion. And look at it, within this same period, this was what we call a major confidence boost for investors. Its revenue climbed by about 18% year on year. In 6 months, the company has made over 2 trillion naira in revenue, but its Nigerian operations is still leading the charge. It accounts for about 60% of its total revenue. Despite inflationary pressures and FX volatility, the company's cost of sales, which is basically its raw materials cost and adjoining costs, rose by just around 2.4%, and this helped boost its overall margins. Earnings before interest, which is like earnings before interest, taxes, depreciation, and amortization, EBITDA, came in about 944.9 billion, let's say 945 billion naira. And in terms of margin, that was about 45.6% margin. Its Pan-African operations also did well. The company reported about 641 billion from its Pan-African operations. That was about 31% of its total revenue. And during the 6 months period, during the 6 months period, get this, the company sold 15.7 million tons of cement. This was just a slight decline from what we had in H1 2024. But some people will consider it still impressive considering the tough economic backdrop that we've had. Then we saw their borrowings also rise to about 938 billion during the half year. But in terms of cash, the company still has a healthy cash position of 421 billion naira. With a profit jump of about over 170% and strong cost control, the company is, we say Dangote Cement is cementing its lead in the building material space. So the question now is, can the momentum carry through to the second half of the year? And that's where we have Matilda De Falujo, a research associate at Meristem Securities. Good morning, Matilda.
Hi, good morning. Can you hear me?
Yeah, I can hear you. Good morning. How are you doing?
I'm very well, thank you.
Okay, so I would start very quickly. Dangote, the cement company, delivered an impressive 520 billion in H1. What do you think were the major catalysts for this surge in net income? Is it pricing? Is it increased export or cost control? Basically, what can you say?
I mean, like you've highlighted, the profits that they currently have is quite massive, and the core drivers, I would say, they had some level of margin resilience, not just top line expansion, But the big thing that we are seeing now is their pricing. They were able to massively do some things, or reduce their costs, the cost that they normally incur. So particularly we have in Nigeria where their ex factory prices, held firm despite softer volumes. So we saw some an interplay of price adjustment and how it helped in terms of reducing costs. Also you'd see that their production costs also inched like very marginally by 2.4% year on year, and which is actually, if you ask me, I would say it is quite remarkable, especially in this inflationary environment. There was also FX management. They were also able to instead of the 103 billion FX loss that they had last year, they had FX gains this time around, and for the first time, I don't know in how long, can't remember, I have to look again. But I mean, it's quite impressive that they were able to move from a place of FX losses to gains, and the fact that we have a relatively stable exchange rate environment is also a key driver. So this time around, we're able to take some form of pressure off finance costs, which dropped massively. So yes, I would say that their pricing helped, but most importantly, operating efficiency and some level of balance sheets clean up was able to help drive their earnings this time around.
Okay. So now the question is, we've seen that they are in full year 2024, they hit a net income profit after tax of 503 billion. By H1, they already hit a net income of 520 billion. So basically, that's, do you think, how does this performance, how does it influence your expectations for FY 2025? If you ask a layman, the layman will probably just say that means they are going to probably hit 1 trillion net income by the end of 2025. Or what are your expectations basically for the company at the end of this year?
Yeah, I mean, largely in line, seeing that they've already matched their 2024 full year profits by June. And I mean, Q3 is usually for cement players, Q3 is usually their strongest quarter, because it's dry season, so there's a lot of construction. So I would say that the upside is still very much on the table. So I believe that if they can hold this line on cost and also get some much more optics on their volumes in this second half, we're looking at one of the strongest full year earnings prints that we've seen from them in recent history, right? So I mean, I believe that if they're able to just consolidate some of the things that there are the strategies that they put in place this time around. Also, I would say that the risk would now lie in if we see a dramatic reversal in FX. Maybe there is a sharp depreciation, or the monetary authorities now decide to do a devaluation, which I do not see on the table, or maybe there is a disruption in terms of energy supply or even energy costs, with all of these tariffs flying around. So if we see some major reversal, I believe that they are on the way to even stronger earnings in 2025 full year. So we are looking at strong upside to what they had in 2024. And also I believe that this in a way opens up room for a higher dividend payout this time around. I'm looking at between say 40 to 55 naira.
So now you're speaking the language of investors.
I know, right? So it's expected that this will also drive them to pay higher dividends, and to entice investors to do more. So it's really hard not to stay bullish on Dangsem.
Now you answered, you made mention of some of the risk factors that exist, some of the factors of potential energy costs. But I think with the arrival of Dangote refinery into the scenery, maybe we may see a slight decline. I'm not very. So now the question I wanted to
Yeah.
ask is the sustainability, but you've already mentioned, spoken extensively on that. The sustainability
Mm-hmm.
of those gains of H1. You mentioned something around Q3 being a period where a lot of building materials, a lot of
Yeah.
spending on building material happens.
Yeah.
So so basically what you're trying
Yeah.
to tell us is that the gains from H1 are very well sustainable into H2.
Well, I mean, just like I like I said before, we're seeing that they were able to. I think what they did was, just go back to the table to see, okay, what are the things that are eating up costs or driving up costs, and they were able to tackle them, right? And then from what we can see that they are tightly managing their costs. Then there is also an optimization in their use of alternative fuels. I
Okay.
believe that's also giving them an edge.
Yeah, they bought some CNG
FX
trucks.
gains. Sorry.
And I said they also bought some CNG trucks this year.
Yeah, exactly. So all of those things, I believe that heading into H2 2025 and even full year, we'll see relatively better numbers from them. And so like I said before, I think I kind of already answered your question. So unless we see energy shocks or maybe weaknesses in their volumes, there might be I mean, unless we see all of those, I believe that H2 should be another strong run, right? Although it might not, the growth relative to 2024, I mean, due to base effects, might not be as huge, but I believe that when you compare H1 and H2, we should see some level of, betterness, if there's a word like that, in H2.
Okay. So now I want to talk about their Pan-African operations. So we know that Dangote has it has operations in, I think, about 11, 12 African, 14 African countries, if I'm correct. But now we see that for H1, these other countries contributed around 31% of the total earnings. Nigeria contributed around 69% thereabout. What are the standout contributions that you have observed from the export market or the Pan-African operations? What are some of the standouts that you have observed? So let me give this little background. I noticed that in FY last year, for FY 2024, most of the losses that the group made, it made on its Pan-African operations. Is there a reversal of that trend this year, or is still a continuation?
Well, so looking at the figures, what we see is that contributions or even growth in Pan-African operations were relatively muted. We see that revenue declined by over 15%, and some of those pressures came from Ghana and Zambia, and this effectively weighed on other group members. And the issues or the drivers of this decline, I would say we have currency weakness. I mean, despite the fact that Ghana has been trying to improve its, the currency issues it had. Even when we're writing our report, we saw that Ghana was the best performing currency this year, and that, when we compare it to where they are coming from, right? So they've been able to improve their currency stability, but then it's still weighed on operations somewhat, and some import related challenges also continue to be a drag in this market. So I mean, while diversification is a long game that I believe that Dangote is pursuing in this, I believe that they'll continue to pursue diversification, but this time around, Pan-Africa did not necessarily add so much support. Export volumes, of course, from Nigeria are still modest, but I believe that going into H2 2025, there'll be what's the word now? Maybe a redrawing of, okay, how do we allocate? Because when there is so much focus on maybe a particular income stream or income region, there could be surprises, right? So I believe that these issues will be addressed in H2 2025, and we'll see, better contributions from other Pan-African countries.
Okay, so now I'm getting to the part that stock players want to hear about. Do you maintain a hold or buy recommendation at the current price level? Dangote is now trading at 493. I don't know what it's trading at as a market, what market is saying right now, but 493 naira per share as at last week. So is it a hold or a buy for you? What is Mary Stem's recommendation on that particular stock?
So given the like I like to say, the drivers of share price is not just is not one-sided. So we have the fundamentals, we have the technicals, and the sentiment based on, oh, someone has sneezed today, what is the market, how is the market reacting to it? So given the fundamentals, we actually maintain a buy. The stock has already climbed from about 438 to 499 just ahead of the earnings release, and so I believe that there's still room to run. Gross margins are up, finance costs are down significantly, and with the expectation of a positive interim dividend in the range of 40 to 55, I mean dividend payment of in the range of 40 to 55 naira. So I mean I believe that the leg room for growth is still strong, or the upside is quite strong. So the balance or the movement or the consideration in this case now between risk and reward is relatively favorable heading into full year 2025. So yeah, we are holding a positive view at current levels, and of course we are putting our eyes out for input costs and also FX volatilities. But I believe that investors should also do their due diligence to ensure that whatever it is that they are purchasing is it suits their investment strategy.
Thank you so much for sticking with me on the show and providing your very professional insight, Matilda. Thank you so much.
Thank you for having me.
All right. To all of viewers, good morning, and it's been I hope you had an insightful morning on economy and markets. Thank you for sticking with us. This is Economy and Market, and I'm David Olujimi.